S&P ASX 200 has staged a pretty remarkable recovery over the past 12 months, a bit wobbly this week, but that all means that you still need to consider valuations when looking for opportunities. So where do we sit in this spectrum? Marcus Bogdan from Blackmore Capital joins us live in the studio at Barangaroo. Wonderful to have you with us. Good to see you. Where are we on that spectrum in terms of valuations? I mean, if we can generalize here in Australia on the ASX 200.
I think the recovery has been justified by much stronger economic growth and much better earnings growth. But now that is reflected in the indexes, and we now see them as catching up and fair value. Where our attention is really on those quality laggards that haven't participated in the recent rally, and that's where our attention is and our core interest is at the moment.
How would you define a quality laggard in this current environment?
So companies that have generally exhibited earnings resilience and have strong balance sheets. So companies such as in consumer staples or really good industrial companies, or companies in healthcare such as CSL.
Well, we, just to the earlier point with our previous guests, we've been getting some of these companies out with trading updates, firming up their guidance. We had Brambles out yesterday, for example, on track to meet its full year forecast. So that's a tick for investors. Yes. What is there for investors to like for Brambles from here on in?
Well, I think that is a company that's delivered both earnings and dividend growth through the pandemic. 80% of their business is facing into consumer staple companies. They are essentially based in the Northern Hemisphere, particularly in the United States. And you have seen higher import costs, but they've been able to pass those through onto their ongoing customers. So you've seen sales growth, but you've also seen earnings growth and pricing power for the group.
But why then, if you look at that chart, has the share price, why is it still a laggard? Why hasn't the market cottoned on to the growth that you see still for the company going forward?
Because it's been a staple. A couple of reasons. First, both the Northern Hemisphere companies have lagged. It's been the domestic Australian companies that have really recovered. And they didn't have a collapse in their earnings. They've just been steady. And the market has been exposed to the reopeners. Now, I think that's now reflected in the prices. We're seeing that in the miners, in the banking sector. And it has been those good industrial companies which have been really steady, but they haven't been the sort of the point of focus or appeal for investors at the moment.
You made a quick comment at the start. CSL was one of them. Of course, we all know the backdrop of what's been happening over the past year. So is it about to hit a revision on the upside?
Well, they have been incredibly conservative on their guidance, particularly because they delivered a better than expected result in the first half. And we can see that the inventories have been a little bit better for plasma. And I think also the vaccine side of things will continue to deliver record levels of sales and earnings uplift.
Woolworths and Coles, they were a real focal point through the pandemic, but Coles in particular, you could fairly say is a bit of a laggard. It's back with its down, prices are down advertising. It matches my dress today, seared in my mind. So where to for Coles from here? Well,
Coles their performance hasn't been as strong as Woolworths, both in physical stores and online. But they're still, a dominant player in that marketplace. So, they've got a strong balance sheet. They're in essential services, and they do have a very coherent online strategy, which they still have to invest in through Ocado. But again, I think a lot of that has already been reflected in the laggard in terms of its price today.
So in terms of a time frame, is this a medium to long-term hold for Coles? Or because you always see the Woolworths and the Coles, one will gain market share at the expense of the others, and then it'll seem to move around a little bit depending on sales and advertising and everything else. So is Coles sort of a shorter term or medium to long term?
I think more of a medium term, and I think what is driving Woolworths is not only better execution, but also the ability there to spin off Endeavour as well, which is definitely capturing investors' attention at the moment. But I think that longer term, that the fundamentals in Coles remain sound.
Let's jump back into the healthcare space, specifically insurance. Medibank have just got a new CEO. They've underperformed.
Yes.
But are you looking once again
yes,
on the
well,
upside?
that would be a quality laggard. And I think Craig Drummond did a very good job in underpinning that business. And they've been able to deliver market share growth. And also, I think there's a structural change that is occurring because of the pandemic in terms of what's happening in public hospitals, the long waiting lists that have occurred there, and the need to deliver elective surgery. And I think that will be primarily through the private healthcare sector. And so I think private insurance will be a beneficiary of that. And so we do like Medibank, we like the internal appointment, we like the strategy and the execution, and also the strong balance sheet.
Okay, so not sexy, but quality laggards, value over growth. Brambles, CSL, Medibank, and Coles. You've given our viewers plenty to chew over. Marcus, thank you. As always, great to see you
Pleasure.
here.
Thank you very much.
Marcus
Cheers.
Bogdan there joining us from Blackmore Capital.